Today, I'm thrilled to share a glimpse into 6 remarkable companies, 6 growth stocks that are not just on the rise, but are actively shaping the future. I will discuss Supermicro, Semrush, and 4 other outstanding stocks. These are the companies that are leading the charge in their respective industries, pushing boundaries, and delivering innovative solutions to today's challenges. In this presentation, we'll go beyond the surface and delve deep into each company. So, let's dive in and discover these exciting prospects for the year ahead. Block is a company that is revolutionizing the financial services industry, and recently it has become clear that investors are becoming more and more confident in the company, reflected in the share price. The stock has surged an impressive 53% in the last 6 months, making it a compelling opportunity in the market. Block trades on the New York Stock Exchange under the ticker symbol XYZ, formerly SQ. Headquartered in San Francisco, it was founded by Jack Dorsey and Jim McKelvey. Jack Dorsey, born on November 19, 1976, also serves as the CEO, as well as being the co-founder of Twitter. The company was initially named Square, and the name was inspired by the square-shaped card reader that was the first product launched. In December 2021, Square was renamed Block, better reflecting the company's expanded ambitions beyond just payment processing. Block is a multifaceted financial technology company that offers a suite of services for both consumers and merchants. Its main brands include Square, a comprehensive payment and business management platform for sellers, Cash App, a digital wallet for peer-to-peer transfers and financial services, and Afterpay, the popular buy now, pay later platform. Furthermore, Block is heavily involved in the Bitcoin space, having launched its own self-custody Bitcoin wallet called Bitkey and actively developing its own Bitcoin mining hardware and systems. Lastly, Block has a music streaming platform called Tidal. Revenue estimates show that about 50% comes from Square, 35% from Cash App, 10% from Afterpay and the remaining from the other business segments like Bitkey, Tidal, and their Bitcoin business. Block differentiates itself with its unique ecosystem that seamlessly connects merchants and consumers. The company is a disruptor, constantly innovating and introducing new products and services, most notably the focus on crypto. Block also has a strong focus on underserved markets such as the unbanked, providing them with financial tools, and they have a mobile-first approach. Block's early and strong adoption of Bitcoin, and its unique integration of AI tools, make it a leader in the crypto financial services space. Looking ahead, Block's future is filled with exciting possibilities. We could see Block further expand its international footprint, leveraging its existing platforms and infrastructure. It could become a leader in mainstream crypto adoption. We may see Cash App evolve into a super app, encompassing all aspects of personal finance, and the implementation of more AI-powered solutions could drive customer satisfaction. Block may also be instrumental in building a more decentralized financial system, as well as continue to innovate with new hardware products. Please keep in mind, these are all potential scenarios, and not definitive predictions. Block serves a wide variety of customer groups. On the merchant side, it caters to small and medium-sized businesses across numerous industries, providing them with tools for payment processing and business management. On the consumer side, Block's customers include Cash App users and Afterpay users, people that use the platform for peer-to-peer payments, investments, and BNPL services. Estimated revenue splits indicate that roughly 60% of revenue is derived from merchants and 40% from consumers. Also, Block's rich partner base, including Cisco, Wix, Restaurant 365, and Intuit, is noteworthy. Block operates in a competitive landscape with numerous rivals. In payment processing, key competitors include PayPal, Stripe, and Adyen. In digital wallets, PayPal with its Venmo offering, Apple Pay, and Google Pay are major players. For buy now, pay later, Block competes with Affirm, Klarna, and PayPal's Pay in 4. In POS systems, it faces competition from Toast and Shopify POS, among others. While Block holds a leading market share in the U.S. for POS systems, and a significant adoption of Cash App, especially among lower-income adults, the markets are highly fragmented and competitive. Let's examine Block's financial performance from 2019 to the trailing 12 months, or TTM. Revenue has demonstrated significant growth, from $4.7 billion in 2019, surging to over $23.8 billion in the TTM period, showing a very strong upward trajectory. Operating income paints a more mixed picture. While it was positive in 2019, it fluctuates before showing a strong positive trend in TTM. Block's cash position remains strong, with cash and short-term investments totaling over $8.8 billion in the latest TTM period, providing a solid foundation for future growth and strategic investments. Several factors have driven Block's stock price appreciation. The company's strong financial performance, marked by consistent revenue and earnings growth, has instilled confidence in investors. A significant driver of this positive sentiment is the impressive 7.5% year-over-year increase in gross payment volume in Q3 2024. This growth trajectory is further validated by the company's strategic partnerships with companies like Cisco and Google Play, as well as the success of Afterpay, which has expanded its consumer base and driven higher transaction volumes and revenue. All of these combined have led to the strong 53% stock price increase of the last 6 months. Further contributing to Block's success is the growing momentum of Cash App and its offerings, such as the Cash App Card and Borrow service. The company's strategic position in the Bitcoin space also has attracted investors. Furthermore, the focus on improving the seller onboarding experience and implementing more centralized sales leadership have contributed to the long-term outlook of the company. Finally, analysts are largely optimistic about the company's prospects. Block currently has an overall rating of strong buy with a mean target price of $98.97, denoting the upside potential from current price levels. Block is a high-growth stock, and as such investors have to consider that it often has a higher price-earnings ratio, reflecting the fact that Block is reinvesting earnings into future growth. Analysts are projecting strong revenue and earnings growth for the coming years. Based on this optimistic outlook, and the fact that the company has an overall rating of strong buy with a mean target price of $98.97, January 2025, there is still potential for Block to grow. In summary, Block has compelling pros and cons. On the positive side, it's an innovative leader disrupting the financial space with exciting new technologies. Block has strong growth potential in multiple markets. The addressable market is significant with the possibility of serving both merchants and consumers globally. Block has strong exposure to the crypto market and utilizes AI to improve their business. However, the company faces intense competition and regulatory risks, is susceptible to customer fraud due to compliance lapses, and has in the past experienced service outages. Finally, we must not forget the business realignment, where the company is refocusing resources, which may indicate uncertainty. Investors have to take these factors into account when considering Block as an investment. SEMrush, a leader in online visibility management, is experiencing a remarkable start to 2025. The stock price is reflecting this positive momentum with a strong 49% increase year-to-date. Is the stock still a buy? We give you a deep look at the company and its soaring stock price. SEMrush trades on the New York Stock Exchange under the ticker SEMR. Headquartered in Boston, Massachusetts, the company was founded by Oleg Shegelev, who also serves as CEO, and Dmitry Melnikov. Originating as a humble SEO tool in 2008, SEMrush has transformed into a comprehensive SaaS platform for online visibility management. Oleg brings a passion for innovation to the leadership of the company. SEMrush's core offering is its all-in-one online visibility management platform. This platform empowers users with comprehensive tools for keyword research, competitor analysis, technical SEO site audits, backlink tracking, content creation and distribution, social media management, paid advertising research, and market analysis tools. These are the biggest revenue drivers for SEMrush. SEMrush distinguishes itself through its comprehensive, all-in-one platform that eliminates the need for multiple disparate tools. It provides accurate and extensive data from major search engines, combined with constant innovation. Their focus on cross-selling and strategic acquisitions further strengthens its position. In addition, their global approach makes them accessible to a broad customer base. Finally, with the focus on all aspects of the online marketing journey, from keyword research to campaign tracking, they cover the whole marketing process. Looking ahead, SEMrush is positioned to become an AI-driven powerhouse for marketing insights. Potential future scenarios could include hyper-personalized platforms, seamless integrations with other marketing tools, expansion into new markets, a powerful content creation suite, and democratized access to enterprise-level data analysis. These are just potential futures, but they demonstrate the direction SEMrush is taking. SEMrush serves a diverse customer base, primarily consisting of small and medium-sized businesses, marketing agencies, and large enterprises. These clients span across various industries, including consumer internet, digital media, education, financial services, healthcare, retail, software, and telecommunications. While exact revenue percentages by group are not public, we can say that the majority of the revenue is generated by SMBs. SEMrush works with a lot of well-known brands around the world. SEMrush operates in a competitive landscape with significant players like Ahrefs, Moz, SimilarWeb, and Surfer SEO. While SEMrush is a market leader, competitors such as Ahrefs have a strong hold in the SEO tools space. Each competitor has different specialties, like Ahrefs with backlink analysis, and SimilarWeb with web traffic data. SEMrush has a very strong all-in-one platform. Let's examine SEMrush's financials from 2019 to the latest TTM data. We can see a strong trend of revenue growth. Revenue has grown substantially, from $92.1 million in 2019 to $357.6 million in the trailing 12 months, a clear indicator of the increasing demand for SEMrush's services. Operating income, although negative in previous years, has shown significant improvement, with the TTM period reaching a positive $11.5 million. This is a significant improvement. Regarding cash and cash equivalents plus short-term investments, the total amount stands at $240.5 million. This provides ample resources for future growth and strategic investments. The stock's impressive 49% year-to-date increase can be attributed to a mix of positive factors. Improved macroeconomic conditions have fueled digital marketing spending, boosting SEMrush's financial results. These strong financials, coupled with positive analyst coverage and a successful cross-selling strategy, have driven investor confidence, making the stock surge to new heights. The high PE ratio of 228 reflects the market's high growth expectations for SEMrush. Investors are clearly betting on the recovery of digital ad spend and the company's leading position in the growing digital marketing software market. This valuation also stems from the company's impressive gross profit margin of 83% and the significant long-term growth potential within the digital marketing industry. SEMrush's stock recently reached a 52-week high of $17.84, with a current market capitalization of $2.61 billion. While some analysis suggests the stock might be trading above its fair value, analysts are generally optimistic, mainly due to the company's strong growth potential. SEMrush is clearly well positioned to benefit from industry trends, and with its commitment to product innovation, they will continue to drive value for shareholders. In conclusion, SEMrush presents a compelling investment opportunity with many pros. The company has strong growth figures, is a market leader, and has a broad, comprehensive offering and high profitability. However, it's important to consider the cons: the high valuation, strong competition, possible disruption from AI, and the sensitivity to macroeconomic conditions. This concludes our presentation about SEMrush. Supermicro Computer, or Supermicro, is at the forefront of providing innovative server solutions. Their journey, reflected in the stock's dynamic price movements, showcases both the excitement of rapid growth and the realities of market adjustments. Supermicro Computer, or SMCI, trades on the Nasdaq Stock Exchange. Headquartered in San Jose, California, it was established in 1993 by Charles Liang and Sarah Liu. Charles Liang, our CEO, brings a deep technical background to the company, holding several patents and having previously led Micro Center Computer. He is known for his hands-on approach and direct involvement in product design and development. The company started as a small business and grew rapidly into the global player we know today. Supermicro Computer is primarily a designer, developer, and manufacturer of high-performance server solutions. Their offerings include servers that cater to a variety of use cases, including high-performance data centers and highly specialized AI and GPU-optimized systems. We see most of their revenue currently coming from these high-performance data center servers, around 60%, but AI and GPU-optimized servers make up around a quarter of the revenue, with storage systems and other activities making up the remainder. Supermicro's diverse product portfolio allows them to address the rapidly evolving needs of the tech industry. What sets Supermicro apart is its unique building block architecture, enabling quick integration of the latest technologies and fast response to market changes. They are often first to market with innovative server platforms and have strong relationships with key technology providers. Their ability to offer highly customized solutions tailored to specific customer needs, combined with their expertise in liquid cooling technologies, positions them as a leader in the high-performance server market. Looking ahead, the future for Supermicro Computer is very promising. We could potentially see them dominating the AI server market, providing key infrastructure for the development of advanced AI applications. The company could also become a leader in edge computing by offering robust solutions for distributed environments. Supermicro is well positioned to drive sustainable computing practices, and their expertise in customized solutions might lead to breakthroughs in specialized sectors like quantum computing. However, it is important to remember that these are potential scenarios and not guarantees of future performance. Supermicro Computer serves a diverse range of customers, including hyperscale data centers, enterprises, research institutions, government agencies, and service providers. A large portion of their revenue comes from hyperscale data centers, around 40%, followed by enterprises at about 30%. Their client list includes industry leaders such as NVIDIA, Intel, AMD, IBM, Microsoft, and most recently Elon Musk's xAI and Tesla. This demonstrates the broad appeal and reliability of Supermicro's server solutions across various sectors. Supermicro Computer operates in a competitive landscape with key players including Dell, Hewlett-Packard Enterprise, Lenovo, Inspur, and Quanta Cloud Technology. While Dell and HPE hold the largest individual market shares at around 20% each, Supermicro Computer currently has about a 7% market share. The market is highly competitive, and many other vendors share the remaining 25%. This dynamic market requires ongoing innovation and adaptation to maintain a competitive edge. Let's take a look at Supermicro Computer's financials. As you can see, from 2019 until the TTM period, we observe a strong increase in revenue from around $3 billion to almost $15 billion. This demonstrates a remarkable growth trend. On the operating income side, we observe an even more impressive trend from almost break-even around 2019 to well over $1 billion at the TTM period. These figures clearly indicate robust business performance and improving profitability. Supermicro Computer's stock experienced an explosive surge in price of over 240% between January 2023 and today. This was primarily driven by the AI boom, which led to a substantial increase in demand for the company's specialized AI servers. Moreover, their high revenue growth, the inclusion in major indices and positive analysts' reports further fueled investor optimism and confidence in the company. After reaching its peak in March of 2024, the stock price of Supermicro Computer experienced a significant decline of approximately 75%. This was triggered primarily by the Hindenburg research report that raised serious allegations about accounting irregularities and other concerns. These claims led to the resignation of the auditor, Ernst & Young, which further intensified the negative sentiment. The delay of financial reports and the risk of delisting from the Nasdaq Stock Exchange contributed to the collapse of the stock price. Currently, the stock price of Supermicro Computer remains very volatile. Despite the challenges, there are still positive signs, such as the high demand for their server solutions. However, it is essential for investors to closely monitor the company's progress in resolving accounting issues, regaining compliance with Nasdaq requirements, and addressing the ongoing investigations. This remains a very risky investment due to the uncertainty surrounding these issues. In conclusion, Supermicro Computer presents both exciting opportunities and substantial risks for investors. The company has a strong market position, an innovative approach, and a focus on AI and high-performance computing, and a broad customer base. However, the accounting concerns, audit issues, potential regulatory risks, and reputational damage are very concerning for investors. It is important to weigh these pros and cons carefully before making any investment decisions.
We're diving into KULR Technology Group, a company that's not only innovating in thermal management, but also creating waves in the stock market. KULR's stock price mirrors the company's exciting trajectory, indicating strong momentum. A deep dive into KULR technology and its stock. Core Technology Group trades under the ticker symbol KULR on the NYSE American Exchange. Headquartered in sunny San Diego, California, this company was founded by Michael Moe, who also serves as the CEO. Originally founded in 2013 under the name KT High Tech Marketing, it transitioned to KULR in 2018, marking a key shift towards their focus on thermal management technology. Michael Moe, born on October 20th, 1973, is known for his forward-thinking approach. He is quoted as saying, "We're not just cooling electronics, we're cooling the planet's future." KULR is at the forefront of thermal management, creating cutting-edge solutions for electronics, batteries, and beyond. They're particularly focused on preventing dangerous thermal runaways in lithium-ion batteries, a critical issue as we increase our reliance on these power sources. Currently, it is estimated that 60% of revenue comes from battery safety solutions, while 25% is from AI and data center cooling, and 15% is from their space, aerospace, and defense business. This diversified revenue stream provides a strong foundation for growth. KULR stands out because of its unique vertically integrated business model. This gives them complete control over design, production, and deployment, allowing for quick responses and quick time to market. They utilize advanced materials like proprietary carbon fiber and phase change materials. KULR goes beyond just battery safety, offering comprehensive energy management solutions. Their strategic embrace of Bitcoin as a treasury asset further highlights their innovative nature. Let's take a look at some possible futures for KULR. Imagine a world where every electric vehicle is powered by a KULR-safe battery, where every data center and AI system relies on KULR's thermal management technology, where KULR technologies are at the forefront of space exploration and the thermal management in nuclear fusion reactors, With the additional possible growth engine from the Bitcoin investment, the sky is the limit for KULR. These scenarios are illustrative and based on current trajectories. KULR's innovations position it for groundbreaking growth. KULR serves a diverse array of customers, including EV manufacturers who need best-in-class battery safety solutions, companies developing data center and AI solutions, and defense and aerospace organizations for high-performance electronics. The customer base is roughly split, with around 40% of revenue coming from the EV sector, 30% from the data center, AI sector, and around 20% from the aerospace and defense sector. Though specific client names remain confidential due to ongoing partnerships, it's clear that KULR works with leaders in their respective industries, demonstrating the value of its solutions. Core operates in a competitive market alongside companies like Gentherm and Dana in the battery space, and Vertiv and Schneider Electric in data center cooling. Many advanced material companies are also competing within the market. While the market is fragmented, KULR is rapidly increasing its market presence with innovative solutions and vertical integration. Looking at KULR's financials, we see a clear and very strong revenue growth story. From 2019 to the trailing 12 months, revenue increased from $0.83 million to $9.7 million, highlighting the company's growing market acceptance of the technology. Operating income has consistently been negative. We see a clear trend of improvement here as well, from operating losses of around $2 million in 2019 to losses around $16.7 million TTM, meaning that a lot of money is invested in the business for the future. Regarding cash position, KULR currently holds $0.91 million in cash and equivalents, which is more than in 2019, while less than in 2022 and 2021. The strong growth in revenue is a positive sign for KULR's future potential. The KULR stock price has experienced an increase of a staggering 1,000% over the last year. This remarkable increase was driven by a combination of strategic factors. This includes winning major contracts in missile defense and a contract with the U.S. Navy, as well as new technology launches like the NASA-certified battery cells, and also the announcement of the Bitcoin strategy. These factors collectively fueled investor enthusiasm and propelled the stock price upward. The initial surge in the stock price was further amplified by increased retail interest and a bit of meme stock momentum. The strategic decision to invest in Bitcoin shows management's forward-thinking and innovative approach. And while the Bitcoin investment grabbed attention, the fundamentals are solid. The core thermal management business is set for significant growth in the expanding EV and AI markets, supporting long-term value creation for KULR. While the stock has experienced incredible growth, it's crucial to consider that KULR currently carries a high PS ratio, reflecting the high-growth narrative. Future profitability is key. As revenues increase and the company continues to prove sustainable profitability, this could still offer substantial upside potential to investors. To conclude, let's assess KULR's strengths and areas to watch. On the positive side, the company offers innovative tech, has significant growth potential, leverages vertical integration, and takes a strategic approach in their operations. On the other hand, KULR currently exhibits a high valuation, a negative operating income, and there is a substantial risk from Bitcoin volatility, and the company has to compete in a very competitive market. However, as an innovative company with substantial growth potential, KULR could be a compelling choice for long-term investors.
Exodus Movement is a financial technology company at the forefront of the digital asset revolution, making it easier for users to access, manage, and control their digital wealth. Since last year, Exodus Movement stock has soared by an impressive 1,100%, capturing the attention of investors worldwide. Is this stock still a buy? Exodus Movement trades under the ticker symbol EXOD on the NYSE American Exchange. Headquartered in Omaha, Nebraska, the company was founded in 2015 by J.P. Richardson and Daniel Castagnoli. J.P. Richardson currently leads the company as CEO. Exodus' journey from its inception to its recent uplisting to the NYSE American Exchange highlights its successful evolution within the digital asset landscape. The CEO, J.P. Richardson, is a visionary leader with deep roots in both technology and finance. For example, he once sold his house to buy crypto at a very low price. He's known for his dynamic leadership and is committed to pushing the boundaries of fintech. He brings a unique blend of experience and fresh perspective to the company. At its core, Exodus Movement operates a comprehensive platform for managing digital assets. The key activities include a secure digital asset wallet allowing users to store and manage many different cryptocurrencies. They facilitate the purchase of crypto with fiat, and the sale of crypto for fiat currency. Exodus also offers staking services for various cryptocurrencies directly within the wallet. These features are complemented by an in-app exchange function, which allows users to swap between cryptocurrencies quickly and easily. In terms of revenue, our estimates show that exchange fees contribute to around 60%, staking services make up 30%, and fiat on and off ramp fees are approximately 10%. What truly sets Exodus Movement apart is its laser focus on the user experience. The platform boasts an incredibly simple and intuitive interface, making it easy for both beginners and experienced crypto users to manage their digital assets. Security is another major focus, using advanced encryption and giving users full control over their private keys. Exodus is also known for its integrated features, such as staking and in-app swapping, which are all available within one seamless experience. Furthermore, Exodus distinguishes itself by offering support for a very wide range of cryptocurrencies, all while emphasizing user privacy with its non-custodial design. Finally, a very active and engaged community contributes to the development and the user experience, which makes Exodus a real standout in this space. Looking ahead, we envision Exodus Movement becoming the primary platform for all digital asset needs. This is based on potential scenarios, not guaranteed outcomes. We foresee an expansion into new asset classes, increased integration with DeFi protocols directly within the wallet, and introducing more sophisticated trading tools. There is also a possibility of more partnerships with traditional financial institutions and an expansion to the global market. We see potential growth into new asset classes such as NFTs. The team remains focused on improving user privacy and security, which we believe is the foundation for sustainable growth and user trust. These are potential avenues, and the future will show how many of these paths they will be able to take. Exodus Movement operates in a dynamic market with several significant competitors. We primarily see competition from hardware wallet providers such as Ledger and Trezor, software wallets like MetaMask and Trust Wallet, and centralized exchanges such as Binance and Coinbase. In terms of estimated market share, Ledger is estimated at about 30%, while Trezor holds about 15% of the market. MetaMask is estimated at 20%, while Trust Wallet holds about 10%. Binance and Coinbase hold 15% and 5% respectively. Exodus is estimated to hold 5% of the market. It is important to note that these are estimates and may vary based on different market conditions and the specific market. This slide showcases Exodus Movement's income statements from 2019 through the trailing 12 months, ending September 2024. Let's focus on two key metrics, revenue and operating income. As you can see, revenue has demonstrated considerable fluctuation. Starting from a modest $7.92 million in 2019, we see a major jump to $85 million in 2021, before retreating to $61 million in 2022. However, it's imperative to note the recent surge to $94 million in TTM. This shows the growth potential of the business and is a strong signal for the positive development. Regarding operating income, the trend closely mirrors the revenue story. While 2019 saw an operating loss of $61 million, the company experienced a significant increase in 2021, resulting in an operating income of $12 million. As of the TTM, we see a positive operating income of $85 million. Although operating income has been volatile, the current trend, similar to revenue, is strongly positive and suggests healthy operational profitability in the recent period. These trends clearly show how much the revenue and profit has fluctuated over time, but the most recent data suggest a positive trend. This slide highlights the primary drivers behind Exodus Movement's explosive 1,100% stock surge. A pivotal moment was the uplisting to the NYSE American in December 2024, a move which instantly boosted investor confidence and visibility, and led to a 36% jump in the stock on the first day. This coincided with a strong bull market for cryptocurrencies, with Bitcoin surpassing $100,000, driving broad interest in the sector. Further supporting this positive development is the introduction of new features to the platform that have driven a record exchange volume of $26 billion in Q4 of 2024. These factors combined have created a significant upsurge. This slide combines the regulatory landscape with the company's financial and operational health. The increasingly positive regulatory outlook has been a crucial supporting factor, driven in part by the pro-crypto stance of Donald Trump and anticipated changes at the SEC. This positive sentiment is reflected in a significant revenue growth of 80%, with $22.3 million in the latest quarter. Despite a net loss in that quarter, the company has a substantial runway of $121 million, with significant reserves in Bitcoin and Ethereum. Strong user adoption due to innovative new features has also bolstered the financials, all of which has contributed to the positive development. In conclusion, the 1,100% rise in Exod's stock price is a result of a perfect storm of positive factors, including the move to the NYSE American, a strong crypto bull market, key product innovations, a more favorable regulatory outlook, and increased user adoption. While the stock's performance has been extraordinary, continued analysis and due diligence is paramount for any investor. The company's strong position in the growing digital asset market, combined with constant innovation and positive market momentum, creates the potential for growth. However, it's vital to remember that the crypto market is volatile, and future success is not guaranteed. ASML, trading under the ticker ASML, is dual-listed on the Amsterdam AEX and the Nasdaq stock exchanges, reflecting its international significance. Headquartered in Veldhoven, Netherlands, it was founded in 1984 as a joint venture, and later became an independent entity in 1988. The company is now led by CEO Christophe Fouquet. ASML's history is marked by groundbreaking innovation and exceptional market leadership, specifically in the domain of EUV technology. Importantly, ASML is the sole provider of the most advanced EUV lithography systems. This technology is the foundation for the most advanced chips produced by industry giant TSMC, solidifying ASML's role as an irreplaceable force in the semiconductor sector and its place as a near monopolist. At its core, ASML's business revolves around the development and manufacturing of photolithography machines, essential for creating the intricate microchips powering modern technology. These machines use light to imprint patterns onto silicon wafers, a process repeated many times to produce functioning chips. ASML's revenue is primarily driven by sales of their cutting-edge EUV systems, making up approximately 65%. Deep ultraviolet (DUV) systems contribute around 30%, while services and the installed base provide a steady 5%. What truly sets ASML apart is its monopoly in the production of EUV lithography machines. This technology is the cornerstone of the most advanced chip manufacturing. It's the company's commitment to constant innovation in R&D that allows them to maintain this lead, which is further strengthened by their collaborations with key chip manufacturers and global suppliers. The complexity of these machines and their supply chains also act as a major barrier to entry for potential competitors. Looking ahead, ASML's future appears extremely promising. Driven by the increasing demand for high-performance computing, AI, automotive, and consumer electronics, the need for advanced chips is only going to grow. The company is poised to dominate the next wave of innovation through their high-NA EUV systems, further driving down transistor size and performance. ASML's reach could extend far beyond the current technology spectrum. This could position ASML as a central player in many industries reliant on advanced chips. It is important to remember that these scenarios are potential and not certain outcomes. ASML's customer base is primarily comprised of the world's leading logic and memory chip manufacturers. Logic chip makers, such as TSMC, Intel, and Samsung, account for the majority of ASML's revenue, at an estimated 75 to 80%, with memory chip manufacturers like Samsung, SK Hynix, and Micron making up the remaining 20 to 25%. These companies are the heavy users of advanced lithography technology and depend heavily on ASML's machines to push the boundaries of technological progress. While ASML dominates the market for photolithography, particularly EUV, the DUV sector sees competition from Nikon and Canon. Both are present in the DUV lithography market but have struggled to keep up with ASML's advanced technological pace. With ASML's clear technological lead, the company holds a dominant position in the overall lithography market, with nearly 80% share. Moreover, ASML's near monopoly in the EUV market remains unchallenged. This is a market position that is very hard to achieve. To underscore the immense complexity and unique nature of ASML's machines, consider the anecdote of a Chinese company that once bought an ASML machine, hoping to copy it. Despite years of effort, they were unable to replicate the technology, thus highlighting the uniqueness and the high value of ASML's machines and the desperation of others who want to acquire this technology. This slide presents ASML's financial performance over recent years, highlighting the consistent upward trend in both revenue and operating income. As we can see, revenue has increased substantially since 2019, from $11.8 billion to a high of $27.5 billion in 2023, which reflects the increasing demand for ASML's advanced technology. Although we see a slight decrease in revenue in the latest TTM data, the company still has a remarkable performance in terms of growth from 2019 until now. The robust operating income shows a similar growth pattern. It went from 2.8 billion in 2019 to an impressive 9 billion in 2023. This demonstrates ASML's ability to effectively manage costs while scaling its operations. Although the operating income decreased in the TTM data, the trend from 2019 to now is clearly upward, showcasing the strength of ASML's business model and the strong financial health of the company. ASML stock has experienced an incredible surge over the past 5 years, increasing by an impressive 160%. This remarkable growth is fueled by several key factors. Firstly, ASML's unique position in providing EUV lithography, essential for advanced chip manufacturing, has driven substantial demand. Secondly, the global semiconductor boom has given rise to increased investor confidence and interest. The company has consistently shown remarkable revenue and operating income growth. ASML strategic partnerships with major chip manufacturers, such as TSMC, only strengthen their position as a key player in the industry. Finally, there has been increased global demand for advanced chips, which are made with ASML's machines, which are used in high-growth areas such as AI, HPC, and EVs. Together, all these factors have significantly contributed to the stock's incredible upward trajectory, reflecting ASML's central position in the technology and semiconductor industry. Since July 2024, ASML stock has experienced a significant 30% decline. This downturn is primarily attributed to the imposition of export restrictions by the US on sophisticated chip-making machines destined for China. The US authorities have recently updated these rules to include more restricted technologies, including metrology and software, as well as specific fab locations in China. These updated rules may also impact DUV immersion lithography systems, pending a security assessment by Dutch authorities. ASML is fully committed to complying with all applicable laws and regulations, while navigating these new challenges. While there isn't an anticipated impact in 2024, for 2025 the impact is expected to be in line with previous communications, which is that the company expects a net revenue between 30 and 35 billion, with 20% from the Chinese market. Most importantly, ASML expects that its 2030 net revenue expectations between 44 and 60 billion is not impacted by the new regulations. In conclusion, while navigating some short-term headwinds, the long-term demand for ASML's technology remains strong. To conclude, ASML presents a compelling investment opportunity. On the positive side, their technological leadership in EUV provides a significant competitive advantage, and the company's financials are strong. High barriers to entry and a rapidly expanding semiconductor market ensure sustained demand. However, there are also risks to consider. The geopolitical landscape and recent export restrictions add an element of uncertainty. The stock's high valuation means that it can be more sensitive to market fluctuations. Furthermore, a reliance on a few key customers and broader economic downturns pose some risk. We believe that the pros outweigh the cons, positioning ASML as a truly exceptional investment option in the high-tech world. That concludes our in-depth presentation on 5 compelling growth stocks for 2025. We've taken a deep dive into Block, Semrush, Supermicro, Kohler Technology, Exodus Movement, ASML, exploring their unique businesses and their positions in the market. Each of these companies presents unique opportunities, along with their own set of risks. We encourage you to use this information as a starting point for your own thorough research. Thank you for joining us, and we hope this analysis has been insightful. Please subscribe and like for more future content. Thank you for your time.